Good afternoon, everyone. Today, I'm pleased to present our financial ratio analysis report. This is our group member. I'm Zheng Yaqi. Next is Bai Shengwei, Qin Jinxi, Dongfeng Shuo. Our research focuses on the aerospace industry in Malaysia, specifically comparing AIA Malaysia and Allianz Life Insurance Malaysia Berhad. The data analysis cover the year from 2022 to 2024. The part one is financial. Part one is liquidity ratio analysis. You can see the chart. The current ratio in 2022 is 3.01, in 2023 is 3.04, in 2024 is 2.31, and the average is 1.1 to 1.5. Quick ratio is in 2022 is 3.01, in 2023 is 3.04, in 2024 is 2.31, and the average is 0.8 to 1.2. AIA's liquidity ratio has slightly decreased over the year, but remains above the industry average, indicating a relatively healthy liquidity purpose. AIA's short-term debt repayment ability is weaker, raising concerns about its financial stability. Next, for asset management efficiency, fixed assets tower in 2022 is 23.8, in 2023 is 4.4, in 2024 is 4.65, and the average is 3.25. Total asset turnover is in 2022 is 0.15, in 2023 is 0.626, in 2024 is 0.668, and the average is 0.05 to 0.01. AIA's fixed asset turnover ratio has steadily improved and reached the industry average. However, the high proportion of no liquidity assets limits asset converts efficiency and hides potential liquidity risk. Analysis performs better in this area with a more efficient state structure.
The second one is the debit management ratio. Regarding debit management, AIA's debit to invested capital ratio remains close to the industry average, but shows a slight drop in 2023, recovering again in 2024. Nevertheless, AIA's debit risk remains relatively high, with debit levels nearing the industry ceiling, leading to significant interest burdens and repayment pressure. This also restricts capital flexible for future expansion. Just like the picture. The third is profitability ratio analysis. In terms of profitable, AIA's net profit margin has significantly increased over the past 3 years and is expected to exceed industry average in the future. ROE has steadily grown, surpassing the industry average. However, return on equity is ROE shows considerable fluctuations, indicating that financial leverage heavily influences profitability, while ROE remains higher than the average. These fluctuations suggest underlying volatility.
The fifth item is market value ratio. When analyzing market value, AIA's price-to-earnings ratio and market-to-book ratio were about industry average in 2023, but dropped sharply in 2024. This indicates a slowdown in growth and heightened market risks. The significant fluctuations suggest unstable investor expectations regarding AIA's future earnings and valuation. The next item is two-prong analysis. Through the two-prong analysis, we observe that IAI's ROE performance is volatile and differs significantly from its competitors. This may be due to aggressive business strategies and high leverage risks. It highlights the need for IOI to further optimize its business operations and capital structure to ensure more stable shareholder returns.
Okay, now let's focus on cooperation with Allianz Malaysia. And in our cooperation with Allianz, we identified several key issues and proposed solutions for AIA. The first one is liquidity measures. The problems is weaker shorter solvency and a high proportion of non-liquid assets. And we can optimize asset allocation by increasing liquid assets, shorten receivable collection cycles, establish early warning system, and meeting emergency fund. And next one is asset management issues. Aggressive fixed asset investment and insufficient asset utilizations. And the solution is liquidate inefficiency assets, invest based on actual needs, optimize business process, diversity operations, and adopt Allianz asset management practice. The third is debt management. High debt levels increase financial pressures and limit capital flexibility. And these issues can prompt long-term insurance products to stabilize liabilities, expand financing channels with long-term investment. Next one is profitability issues. Significant profit fluctuations and concern over earning quality. The solution is focused on stable core insurance products, reduce dependency on volatile investment income, lower financial leverage, and support growth through equity financing and retained earnings. The fifth, market value reduce. Lower EPS compared to Allianz and volatile market valuations. We can improve business structures, focus on high margin products, enhancing operational efficiency, stabilize profit, and improve communication with investors to restore market confidence. The last one is two-prong analysis. Complex ROE behaviors and unstable financial leverage. The solutions we can analyze each two-prong component, optimize profit margins, asset turnover, and leverage benchmark against the Allianz, and ensure sustainable shareholder returns. And the last one is suggestions. Optimize the allocation of current assets and shorten the receivable cycle. Manage liability carefully and balance leverage and capital cost. Improve the profitability for business and reduce profit volatilities. Standardize the asset management efficiency of Allianz and improves operation process. Through the above measures, AIA can further consolidate its market competitiveness and achieve long-term steady development. And next, these are our reference and appendix. Okay, that's all for our presentation. Thank you.